So, hello, and a massive hello to everybody. Hope everybody's having a great day wherever you are, whatever you may be doing. This is 50 Pips, rocking and rolling, 24th of March, 2020. No trade calls or recommendations are responsible for their own stuff. We're here for educational purposes only. So, quick update this morning. Again, guys, remember the video updates. The base case is that, we have the weekly update on Sunday, and then if anything changes, we'll do another update. And if things are changing every day, we might have an update every day. If it's every 2 days, if nothing changes, we might only have another update midweek, or we might not even have an update, right? So normally I would not put anything out this morning, but I got a couple of emails out and I just wanted to clarify this. You have to let things play out, okay? Once you look at levels, once you look at moves, market has to do its thing. There's no point doing an update every day, or there's no point talking about it every day if nothing has changed, right? So what we said on Friday, on the weekend update, we said that on Friday, we saw, even though a lot of people were panicking into the low, we saw a lot of signs that we could be coming into this short-term bottom, right? We said not only because of the news flow, not only because the central banks were throwing everything at it, all these kinds of announcements, and that we expected more announcements to come over the weekend and more announcements to come this week, also the Senate bill. But also, if you looked at the underlying technical action in a lot of different names, it looks like buyers were coming in to us, at least. So maybe there was some institutional buying coming in. And that was highlighted by the fact that stuff like the transport, so IWT, IWM, so the small caps actually closed about 3 to 5% off the highs on Friday, right? Which they didn't close into the hole. And usually we also see that IWM is a good thing to keep an eye. Small caps are good to keep an eye out to give us an idea of what's going to happen, because they tend to lead both to the downside and to the upside. Okay. Then the other thing we're focusing on was those pivotal levels, right? 2,400 on the ES, 7,000 on the NASDAQ, 20,000 on the YM. And we said any move back above those for us is a buy, right? If you were waiting for a tactical trade, you wanted those to move below heavy, back above. You get long with a stop below whatever low we've put, and you're looking for that 10 to possibly 20% bounce, right? For the aggressive traders, we've also been talking, and I've been supplementing this on the Twitter feed or on the blog, that basically as soon as you get any kind of announcement or something, the only thing you can really do is close your eyes and buy, right? You can't really start shorting or press the shorts here. It just simply doesn't make sense. Also, the other thing to keep in mind is that we're seeing more and more retail selling, and the action really looks like institutions are nibbling. Also, you're starting to see a lot of people, like a lot of the, Tapper Aikman or whatever, starting to say that they're starting to nibble or they're starting to get long. It's going to be interesting to see how the rebalancing flows play out going into the end of the month and the quarter. Would not be surprised to see some stock buying coming in. And again, also, I saw that yesterday, a lot of brokers reported that yesterday was the largest retail sell day they had of the entire move down. Okay, so here we still have to go through Eurogroups going on. We still have to get through the Senate. So even though things are likely going to be very, very choppy and this thing is far from being over, the tactical play is to look for longs. Now, one of the control charts we're looking at again is the NASDAQ, and you see how technical this has been, and this beautiful little hold here of the 200 on the weekly. And that's also what we were saying all day yesterday, also was the chart of the day on the blog. Keep an eye here, right? Once you start getting daily closes or even weekly closes above this is really ripe for an aggressive bounce. And our base case assumption from this move was to see it pop at least back into the 7,500, right? That's about a 13% move. But as we said, we would not be surprised to see this pop 20% all the way into the 8,000. Unless something drastic changes, this should be seen as an aggressive rip your face off bear market bounce. But again, we have to be open. But right now we're looking for tactically any opportunity to buy any dip in this panic to ultimately hold and for us to move back there. The chart which we've been looking at in a little bit more detail is also the ES, right? And the ES is still below that 2400. Remember, our base case here, especially this week, is that if we close or we keep on getting daily closes or we close the week, especially before below the 2400, chances are we see that final targets we have, which are the 2100 into the 2000, come extremely quickly. But again, even if we it would have to be something very aggressive and ugly, maybe overnight happening, because even if we close heavy or we close around here, remember, markets can correct in time or in price, but even if we close here and there's a risk of some kind of a down open on Sunday, my best guess would be, the after what we've seen from the Fed here, if we close heavy into Friday over the weekend, the Fed's just going to announce they're going to buy stock ETFs too, right? And then, they're going to throw everything at it. So here, really, as we continue to say, as we're kind of stuck hovering here, the next 15 to 20% move is likely to the upside, not the downside. It doesn't mean it can't happen to the downside, but right, refer to the previous discussion we've had. So again, this is going to be interesting to watch, but especially as we go into the Senate vote, especially if we go into the Eurogroup, et cetera, watch how we behave here, because if we start squeezing back above that 2400 and we don't see any sellers come in, then that's also for the more conservative traders, that's going to be a very interesting opportunity to try and get long for at least a 10 to 14, 15% move. This could move very, very quickly. I mean, I don't think it'll go knife through butter through the 2600 unless there's something really spectacular that's announced. But you have to understand there's a lot of people are going to have to cover. There'll be a lot of tactical buying, and after we've seen this pretty much straight move down 36%, even a move back into this 26, 2700, 20% move is nothing, and is still very, very bearish, and it doesn't change the long-term outlook for the economy, right? I still think there's a lot of potential policy mistakes going on. We'll discuss about what Trump's talking about potentially reopening up the economy after 15 days, etc. There are a lot of moving parts. For the message today, again, is focus on the levels, focus on the numbers. You don't fret. You have to let the markets play out. You have to let the charts do what they need to do, right? And that's what we're focused on. Same thing on the dollar. We said at these highs, the dollars were looking for tactical opportunities to fade this dollar move. So look at the euro around the 108. We discussed the yen, etc. We'll update if anything changes, but for now, nothing has changed. So business as usual, guys. All the best. Talk to you guys soon. Take care. Bye-bye.